Hello everyone, welcome back to the channel, welcome back to another video. Today was not a very good day for me, unfortunately. I was so focused on trying to stick with my position that I lost focus on the more important step, which is to make sure I'm only entering good positions. I'm only taking pocket aces trades. It's Friday, so I'm having my Guinness, so I'm gonna have this drink and make this little recap on what went wrong. I'm gonna try and keep today's video pretty short and succinct, so let's get into it. So this is my chart right here. I try to short off the open. I think that was a fine trade, fine loss. It was the right thing to do to get short off the open, since with how bearish we've been, with this gap here, it was definitely the right thing to do, to be bearish. Okay, so I didn't take a pocket aces trades, okay? I was trying to go for the gap close. I was thinking that this was going to be an oops reversal. We went up to the prior day high. We rejected off it. We came back down. I thought we were consolidating here. But here's the reality, okay? There was a big wick here from the news. Then there was a wick up. Then we got a doji bar. Then another doji bar. And then a hammer up bar. So it's very rangy, right, at this point. At this point in the market, like when I'm making my decision and it looks like this, I should be saying, okay, I don't know where it's going to go. I thought it was going to keep going down. I tried shorting. I was wrong. I lost about 4R. Going to my... This is what I'm going to do to change that. I made it very abundantly clear, highlighted it, made it red text, that I need to have two of these three confluence factors going my way. Okay? So I wanted to be short. So I tried to get short, but I only had one of these higher time frame confluence factors going my way. So knowing that, I wouldn't be allowed to take this trade again. I just wouldn't be allowed to, and it would help me avoid a dumb loser like this. I would look at this chart, and let me go to the actual chart. I would look at this chart, and I would say, okay, we're bearish off, oops, make it larger. I'd say we're looking bearish off the open, okay, with these EMAs. But we're above the prior day high, and we pushed up off the open. It's not, yeah, I could have tried for an oops reversal right here. I could have targeted this alpha bar 5 or bar 6. I could have targeted a move back down to this level. That would have been acceptable. But here, when we're above the open, we're inside the prior day range, so that's not a trade that's not any confluence, okay? Because I want to go long above the open and short below. I want to go long above the prior day high and short below the prior day low, and we're inside the prior day range, so this is neutral. And then, so that means I need to have two of these be aligned if I'm inside the prior day range in order to take a trade. And that simply didn't happen, and I should never have traded. So that's why I highlighted these, make them all red. Just make it very clear to myself, I need two of these three variables in order to take a trade. Okay? Then I have a chop check, which is just a reminder from what I talked about here. Like, there's wicks, if we're inside if we're inside the previous 1 hour bar, just stuff like that like, hey, we shouldn't trade here. That one's pretty self-explanatory, I think. Ideally I will not be inside the previous 1 hour bar, but I realize if you just look at that 1 hour chart, most of these bars are inside the previous 1 hour bar. So there will be times that I'm going to trade inside the previous 1 hour bar. The only caveat is if I do trade inside the previous 1 hour bar, better be damn sure that 2 of my 3 higher time frame confluence variables are hit. Okay? Every single trade, I need to have 5-minute EMAs going my direction, except for what? Except for if I'm going for an oops reversal, a gap close. Okay? I'm allowed to do that if it's supported by the 1 hour EMAs, which is what happened today. Okay? I'm allowed to attempt it one time if I'm above the open. Okay? I'm allowed to go against the open and against the EMAs one time, which would have been bar 5 or bar 6. But once we get this pause here and we get this hammer up bar on bar 11, make it easier to see. Once we get this hammer up bar on bar 11, I'm no longer allowed to start going for gap closes until we close below this green opening level line. And in fact, I'm going to make that a solid green line because it just makes sense to me. Should we change the color of this one too? To maybe say, we'll make it brown. Save. Okay. So I changed the color of all this. I'll make these levels more clear to see. Alright. So my higher time frame levels, the red is the prior day high, the blue is the prior day low, the brown is the prior day close, the green is the current day open. Okay? And the green line, like these are all very important levels. Price action reacts to these levels, and that's where I'm going to focus on trading off of. Okay? So I just need to be better about taking pocket aces. Today was just a flat out very preventable losses. Maybe I would have missed this move to the upside, but that's okay because that move is not part of my plan. So it's what it is. I have to accept it. I am accepting it. I'm going to learn from this, and I'm going to move on, and I'm going to be better. Stat-wise, I'll show my stats on the day. All losing trades, 331.25 down after fees, down 350. Took a big chunk out of my account, and that sucks, but nothing I can do about it now except what I have already done, which is focus on how can I make sure I'm only taking pocket aces again and not trading in bad times. Answer is simple. I need 2 out of these 3 higher time frame confluence factors. I want to ideally trade outside the previous 1 hour bar, but if I trade inside it, I better be sure that I have 2 of these factors. In fact, I should not enter any trades unless I have 2 of these 3 factors. If I'm going for gap closes, I defined that to be much more specific. Okay, this used to just say 5-minute gap close. Now I made it say 5-minute gap close, only the first oops attempt, or it must be inside the gap zone, because that would mean that I have 2 of the higher time frame factors my way. I would be, in this case, I would have been below the open. If it say it broke this level and then it broke through and then came back and consolidated at this level, even though these EMAs probably wouldn't be in my favor yet, they would probably be about to switch, and I would have 2 higher time frame confluence factors. I would have the hourly EMAs, and I would have that I'm being short below the open. So, but I should have just kept myself out of this by saying, okay, it's wiki. It's not a good time to do this. And also, if we look at the daily chart, we've been like, I don't know, we've been just way extended away from the EMA for a minute. Kind of makes sense that it would want to pull back to this EMA, and this is only the 9 EMA on the daily. So is what it is. The hourly EMAs are bullish now. I wouldn't be surprised if we try to go short, if the market turned around and try to go to the bottom of this range again next week. But we're going to have to play that by ear, see what happens when it comes time to trade. All I know is I'm not going to enter unless I have these higher time frame factors on my side. I'm going to try my best to avoid chop and just not trade the bad times. I'll keep tracking. I'll keep measuring my expected loss and expected value before I get in. And then I don't really have anything else to say now. So that'll do it. Thanks for watching. Have a great weekend. See you next time. Peace.